Students, my name is Jesse George, your professional accounting teacher. Before you continue with this video, please subscribe to my YouTube channel, The Georgian Theory Concepts. Thank you. All right, let's get started. In this video, we are going to continue with dissolution of partnership business. Okay, dissolution of partnership business. All right, I told you in the last video that there are three significant accounts, that must be prepared, which are number one, realization accounts, partners capital accounts, and cash accounts. So these three accounts are very, very significant as regards the dissolution of partnership accounts. It's very, very important. So watch the last video before you continue with this video if you have not done that. I use a simple illustration to demonstrate the concepts, okay? All right, now let's look at this question together. You can pause the video, copy the question, pause the video, you can copy the question. The question says that Obasanjo and Ayim have been carrying on a business as drappers and drugs dealers in the same building for years, sharing profit or losses equally, decided to dissolve the partnership. On the date of dissolution, the balance sheet was as follows. So you have been given the statement of financial position. That is the balance sheet, the asset side, and the capital side. Now, these are the terms of agreements. So like I always say, advise the students, you start with the additional information. Okay? So to do that, you have to draw the three important accounts. And what are they? Realization accounts, partners capital accounts, and cash accounts. Okay, so let's do that. All right, so the three accounts has been drawn as follows. Then you start with the additional information. So let's look at the additional information together. Obasanjo was to take over premises at 21,000. Don't forget, when a partner takes over the assets, so look at the assets, he was to take over the premises, the stock as at these prices, then the features at 1,500. Okay, so that's one of the features in this dissolution account. A partner or one of the partners or the partners can decide to take over the assets instead of selling the assets to outsider. Okay, so what are the accounting entry? So don't forget, what we are doing is accounting for dissolution. So when a partner takes over the asset, we need to debit the the partner's capital account. So you debit the partner capital account with the realization value, okay, with the value of agreed. So I have added the three assets, the value of the three assets taken over. So I'm going to debit Obasanjo's capital account. Now write assets taken. Okay. And that is 27,600. Then you go to realization account and write assets taken 27,600. Okay. In the same vein, Ayim also took over the stock 5,400 and the 900. Okay. And features. So when you add these together, it's going to give us 5,400. Okay, 5,400. So 5,400. You add the two assets together, which is 45 plus 900. So 5,400. Then we have assets taken by, that is Ayim. This one is by Obasanjo. So this one is 5,400. So don't forget that all the information in the additional information must always appear twice. Okay. So the double entry is completed. When a partner takes over an asset, you will debit the partner's capital account and credit the realization account. Write it down. Write it down. All right. Now let's go ahead. Goodwill is to be written off. The goodwill is to be written off. Now, if the goodwill is to be written off, we go to the goodwill, the statement of financial position, you tick and move it to you debit the realization and say goodwill. That is 3,000. Okay? The goodwill is to be written off. So we have written off the goodwill. So that has been done. Then they said the losses on debtors was to be shared by the partner. Losses on debtors was to be shared by the partners. Obasanjo 3/5 and Ayim 2/5. Obasanjo was to pay the creditors. So losses on the debtors. So let's take note of this. So we'll come back there. So we pick this additional information one after the other and you treat it accordingly. So take note of this. Then Obasanjo was to pay the creditor. So let's go to that, was to pay the creditor. Now, what is the value of the creditor? The creditor is 9,600. 9,600. So if I'm to pay the creditor, I will credit Obasanjo's account because he's making payment and debit the creditor. I will debit the creditor because the creditors collects money. That's the receiver. And then I will credit Obasanjo. So I will come here and say, I will leave a line. So I will come here and say creditor 9,600. Then the double entry, you credit the, you debit the creditor. All right, to write off that. Okay. Now this has been done. Just tick. So we are no more coming there. Then the debtor realized is 2,500, 2,500, and the proceed was retained by Obasanjo. So it means Obasanjo collected the money. So what do? You debit debtors. You debit Obasanjo's account 2,500. Then you credit the realization account debtors 2,500. But if you look at the original debtor, and that comes to the loss, there is a loss. The original debtor is more than what was collected from the debtor, and is to be shared amongst the partners. So if it's to be shared, it comes as a bad debt. Okay, it's to be shared by the partners. All right. So we have 3,150 minus 2,850, and it's to be shared by the partners. And this is 300. So we need to share this into two. So let us share it. So we have bad debts. So they said Obasanjo will take 3/5 multiplied by 300. And this will give you 1/8. Then Ayim will take 2/5 multiplied by 300/1. And this will take 1/2. Okay, so we have 1/8. Then we have 1/2. All right. So that is the treatment for that. And I believe we've dealt with the additional information. So the next thing is to go to the capital side of the balance sheet, or you go to the asset side of the balance sheet. So you pick this figure one after the other. This is capital account. So you come here, you write balance. That's why I said you should always leave a line for the capital balance brought down. All right, you pick the figure one after 21,000, and this is 24,000. Okay, class. All right. Then the debtor has been done. Then we come to the asset side of the balance sheet. Goodwill has been taken care of. Then the assets, we have freehold premises. You will add 24. Just add all the assets together. 24 plus, so you pick up your calculator, you now add, and that will give you 39,600 apart from the cash balance. So when you add 24 plus 3,450 plus the debtors plus this 9,000, it will give you 39,600. Then you will debit, that is assets, all the assets. Okay, we have 39,600. You debit the realization account. You debit the realization account. Okay. Now the cash. Look at the cash. Look at the cash balance. Cash at bank. You come to your cash account. You come here. You say you debit it and say balance brought down. How much? That is 12,000. Okay, 12,000. Having done that, you now put down your question. So the next thing is to calculate, having entered all your information in these three books. So you go to the realization account to calculate, uh, let's calculate, what is it called? The share of profit or loss. So if you look at this side, when you add this side together, what do you have? You add this side, so you weigh the two. Which one is greater? So for my own calculation, I discovered that the debit side is more than the credit side. So that will give us share of loss. Share of loss. Okay? Share of loss. So between Obasanjo and Ayim, and they are to share, according to the question, they are to share profit and losses equally. Okay? So you have 1/2, 1/2. And the difference, now the total here is, when you take the total, this is 42,600. Okay, 42,600. Here too we give you 42,600, and the difference is, what is the difference? When you add this together, remove it from here, it will give you, from my own calculator, is 6,450 multiplied by 6,450, and this share of profit will give you 3,225. 3,225. Okay. Then immediately when you calculate a new figure, you have to look for the double entry for this, so that you now debit. When you calculate your share of loss is always on the credit side of the realization account. Then it will come on the debit side of the partner's capital account, share of loss on realization. So the share of loss is shared equally 225. 3,225. Okay? All right. Now we are done with this. Then the next one is the partner's capital account. So let us balance the partner's capital account. So to balance the partner's capital account, you will add this side. You do this individually, Obasanjo. Then you add this side. So from my own calculation, I discovered that the debit side of Obasanjo is more than the credit side. So the debit side is 33,855. Is more than this, 33,855. It means Obasanjo is to be settled. Okay, so cash received by Obasanjo. So the difference, Obasanjo will receive 3,255. Okay, it will receive from the partnership 3,255. So the difference here will now debit. This is cash paid. Cash paid back to the business. Okay, so you debit. Sorry for this. This is not a mistake. Cash paid. So because you now debit the cash account, you debit the cash account and say cash from Obasanjo, cash from Obasanjo, okay, which is 3255. All right. Now you do the same thing. I, from my own calculation, the debit side, the credit side of Ayim's account is 24,000, and it's more than the debit side. It's more than the debit side, 24,000. So then it means Ayim will, that's cash received. It will receive the difference. So when you add these three items, then you subtract it. So if you subtract it from 24, okay, subtract it from 24, what do you have? You have 15,225. You can use your calculator to check. 15,225. Then you come here, all right, and said cash to AIM, cash to AIM, 15,225. Then by the time you balance this account, it will balance of 15 to 15 225. So you have your 15255, 15255, okay, 15255. It has been corrected, 15255. All right. So there are other ways, there are another method you can use, but I believe for proper understanding, you use this method and it's allowed. All right. Now, if you understand these concepts, please do share with your friends. Thank you. Bye for now.